In this video, we're looking at the current valuation of four largest US banks: Bank of America, Wells Fargo, Citigroup, and JP Morgan. So can largest US banks benefit from the recent banking crisis? Will there be inflow of capital, inflow of deposits? And largest US banks have much more diversified portfolio. So if they can benefit from the recent banking crisis, which bank is a better buy? Which bank is the cheapest? So we will use price to tangible book value as a valuation metric to determine which one is a better buy after the recent drop in price. So let's get started. First of all, if you want to get updates about Google stock, Warner Brothers Discovery stock, Adobe stock, or get other investment ideas, please consider subscribing. Okay, after the recent banking crisis, bank stocks declined significantly. Right now, I would stay away from regional banks. So the largest US banks by total assets is JP Morgan, Bank of America, Citigroup, and Wells Fargo. So these four are the four largest US banks by total assets. So which one is a better buy? Which one looks the cheapest? How do we compare their valuation? And price to tangible book value is often used to value banks. So what is price to tangible book value? This is market cap divided by tangible book value. Tangible book value is book value, which is often called the liquidation value, minus all the intangibles. So I'm using ticker terminal to see the chart of price to tangible book value for the last 3 years for these four banks. As we can see, Citigroup has around 0.53 price to tangible book value. Then comes Wells Fargo with price to tangible book value of around 1. Then comes Bank of America, and JP Morgan has the highest price to tangible book value of around 1.76. So if we compare these banks on absolute terms compared to each other, Citigroup has the lowest price to tangible book value. So Citigroup is definitely the winner here. But we also need to compare how they trade according to its own history. So for example, Citigroup right now has 0.53 price to tangible book value, but on average for the last 3 years it has 0.74. So right now it trades cheaper than on average for the last 3 years. So what I did was I compared all these banks, so I put all the data to the table. So on the top we can see the ticker, the bank ticker, the current price at the moment of running the video, current or last price to tangible book value for these four banks, mean value for the last 3 years. Next we measure the upside compared to its own history, and lastly the fair value of the stock. So we can see that Citigroup has around 28% upside according to this metric, 25% upside for Bank of America, and around 10% for both Wells Fargo and JP Morgan. So Citigroup and Bank of America are definitely the winners here. So if we look at absolute terms, Citigroup has the lowest price to tangible book value, but if we compare that to its own history, if we compare these four banks to its own history, Citigroup and also Bank of America looks the cheapest. So for me, Citigroup looks much better on absolute terms and compared to its own history. Also, if we look at the cash position of Citigroup, so this is the info from their 10K, they have 242 billion of cash. So it's very important for the bank to have liquidity. So it's a very good sign for Citigroup. Okay, so we looked at the current valuation of four largest US banks. For me, Citigroup looks the cheapest, both compared to absolute terms and compared to its own history. The second position is Bank of America. I also like that it trades around 25% cheaper compared to its own history for the last 3 years. So if you are planning to add bank stocks to your portfolio after the recent drop in price, Citigroup and Bank of America may be an interesting choice. Also, if you want to get other stock investment ideas, here's the video about Adobe, around 20 to 50% undervalued. If you are not subscribed to the channel, you can use by pressing the subscribe button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.